Welcome back, everybody. If this is your first time seeing a video, please consider subscribing to my channel. If you look underneath the video, there's typically a section where I show some more information and I talk about what it's all about. I make sure I give a disclaimer saying I'm not a financial advisor. These videos I'm putting out are educational for you to learn how to do the analysis on your own and then decide if and when you're going to get involved with something. These are the topics that I'll share on my channel. Basically, the whole idea of this channel is to create the wealth mentality to assist you in pursuing streams of income to have your money working for you rather than you work for it. Please like and share and comment on my video and subscribe to my channel. Here are some other opportunities that if you look at my channel, you'll see there's some other videos related to some of these. And then these are ways to contact me. And as I mentioned in my last video, I typically list some other videos that are related to technical analysis. So you'll see, other technical analysis related videos in here. And then again, this is just for the YouTube keyword search algorithm to help people find this video based on what they're searching. So I try to put all the information that might be derived out of my video in here so that if people are interested and want to learn more, they find my video. So please like and share the video. It'll help the YouTube channel algorithm to make this show up in more people's feeds. And I look forward to having you subscribing as a subscriber to my channel. Click the little bell so you get an alert when I put out a new video. So we're going to move into just technical analysis of, I'm going to do Chainlink this time. I had already did a analysis yesterday on Cardano. It broke the channel. It broke the triangle and things have to be kind of reset now. But there's another triangle forming and I will do another video for that. As you can see, Bitcoin did break out as we kind of laid out, and we were waiting for price action to either go up or go down. And I've put out a video showing possible ideas of when to take profits. Again, this is my ideas, so you have to figure it out for yourself what you want to do. But these are targets of interest based on Fibonacci and support and resistance. So Ethereum as well has broken out, and I'm going to follow up with another video maybe tomorrow. Maybe tomorrow I'll do Cardano and Ethereum. Today we're going to focus in on Chainlink. It was requested by one of my subscribers, so I want to kind of give him some information to have him think about what he wants to do with his Chainlink position, if he has one, or if maybe he's looking to get in, some ideas of when to get in. So with that in mind, what you want to do is you typically want to start at a higher time frame and see what's going on. All right, so it's pretty obvious that we're in an uptrend. We're in a possible bull market. This is the only information that's available on Chainlink. It was not around during the last bull cycle, so this is really all we have. This really has not experienced the Bitcoin Ethereum bull cycle, so it's kind of unknown what it could really do. But you can apply basic Fibonacci, Elliot Wave, and support and resistance to kind of get an idea of where it can be. But again, markets will go crazy, markets will be exuberant, there'll be FOMO, and just because I'm saying targets can be hit, it could be much bigger than that. So you guys gotta, kind of consider that and what you want to do. Like I said, my approach is I have a certain percentage of my portfolio that's a long-term hold, and then I have a certain percentage that's a trading positions to get in and out and just build the trading position so that I could buy other coins or add additional coins to my long-term holds by the profits I'm making on trades. So with that in mind, you go through the cycles up and down, drive down deeper. Between 1 hour and 1 day is typical what you want to stick to. Even at the 1 day, it's a little noisy. It's nice to kind of go out to the weekly. And when you see the weekly, it kind of cleans stuff up. And you know, if you're familiar with Elliot Wave, you could kind of see pretty quickly that, you know, we started somewhere down here. This was kind of like flat, and then the impulse kind of started here, and the five wave up ended there, and then we had a wave 2. Then now we're realistically into a wave 3, and as I mentioned in one of my other videos, if you're thinking about, you know, if you're considering Elliott Wave, you gotta stick to the rules of Elliott Wave. So if this was wave 1 to 2, 3 to 4, it can't go any lower than 1. Now, like I said yesterday, wicks can go lower, things like that, but to kind of set the stage of where you think price action could come down, this is where the worst case scenario, it shouldn't go any lower than this to have the Elliott Wave be consistent. And then we got to figure out where 5 could be. All right, so with that in mind, now what you do is you kind of just start thinking, putting your Fibonacci tool on here, and you start seeing what type of retracements. So it's pretty obvious this is a deep retracement. So chances are the next, you know, if one is deep, the next one's shallow. So, and then the other thing you got to check is to make sure the distance between this one, wave 0 to 1, this next wave has to be equal to or greater. Oh, you know what? I just realized I have logarithmic on, but that's okay. But you can very quickly see that wave 2 to 3 is much longer than 0 to 1. So it has to at least be equal to, but it could be greater than, and it's better. That just shows the momentum that's been in this for wave 2, you know, 3 to 4 to happen. So we don't really know where wave 4 is going to end, but you can kind of see we're already almost there. So maybe this could have been the bottom, like right here. This could be 4 right here. You know, because it's pretty close. You know, it's within the range of 1, and it's supposed to be shallow. So let's check the shallowness. Let's increase this so we could see. So we could see how much wave 2 to 3 retraced. So it actually did retrace pretty big, but it stayed above here. So this is like the point of no return. If it goes below this, then you know, it breaks the rules of Elliott Wave, and then you got to relook the chart to see what reality is. But as you can see again, you know, the retracement bouncing off the 0.5 and the 0.55. So again, these were like, as this was going on, and you know, you kind of like before this occurred, these two candles, you know, if you were to put your pivot on here, if you're waiting to get into a trade, you would be looking to get in somewhere between 0.5 and 0.65, right? I had this set for my last chart, so that's why it's so somewhere in here is where you would have been building a position for the next move, and you would have had a chance right here a little bit, but unfortunately right now it looks like this might have been the low, and now it's, you know, getting ready to shoot up. Short-term target right here. You know, it's gonna approach the negative 23.6 based on algorithms. And so with that in mind, you know, you might have missed the boat on wave 3 to 4 to get in. Maybe it could be, maybe it's not over yet. Maybe it's still going to come down, you know, lower. It could come down as low as this and still be okay. You know, there could be a wick down to 618. So you still might have a chance. But again, this is not financial advice, but if I were looking to take a trade, I would probably, if it actually gave you a chance to get in, if it came down, if it gave me a chance to get in, if it came down to somewhere between this range, that's where I'd be looking to accumulate a trade position for the move. All right, so this is a possible entry. Let's just put All right, so it's just, this is just annotating, saying that maybe if it comes down here, you can get into the trade. All right, so assuming you got in here and now this is the low and it's not going any lower, then we want to put this Elliott Wave 4 there. And now we got to kind of figure out where this should be. All right, so to do that, let me remove this Fibonacci. I'll leave this here as a possible entry. And what you want to do is you want to do a Fib extension, and you want to do it from the entire run, right? So you want to do it all the way down here, all the way up to 3, and down to where you think it's going to retrace into. So if that's where you think, if this was the low and this is wave 4, now we're looking at where it can go. Now, based on this, like I've said in the past, there's always been, you always look somewhere between 414 and 618. So realistically, round numbers wise, maybe you should aim for like $70. That could be where the price action goes on wave 4 to 5. Now, just like we showed earlier, you have different pivots, right? You have the pivot high and then you have the pivot low. You can do a double check on this by doing this. If you go from low to high, that's where it's looking like, right? And if you go from high to low, that's where that's looking. So now what that gives you is a range inside here where there's going to be Fibonacci fighting going on between the bots of shorts and longs. So once it passes on the upside, if it passes is 6.5, it broke the capabilities of the bots trying to push it lower down here. So if the bots succeed, you'll get another entry, and as you see, it's a little bit lower than the 6.5, but price action could still come down here. And this negative 236 is any bots that decided to enter here and drive down short is going to try and push this price action down to this level. This is their target. So just because we've bounced off of here doesn't mean that it can't turn around and still come down into this area. And if in fact, what you want to do here then is probably maybe increase that range somewhere in here. Maybe like if you have $1,000 to buy, Chainlink, for example, maybe as it's approaching the 0.55, you buy 20%, 0.618, you buy 20%, 6.5, you buy 20%, and then, you go in more with 236. And then you're going to have an average price somewhere down here, and then you're going to look for short-term target would be here. If you want to get out, well, first of all, a couple things you could do. Let me just tag. Let me just tag this right here. Let me tag this. And let's go up here. Gotta zoom down here. Let's get rid of these, and then let's see where that extension was again. From here to here, if this was the low, assuming this was the low, then your next target, like I mentioned earlier, probably 70. That's probably a nice round number where people are going to try and just trying to change this. So what I'm doing here is I'm showing you possible targets that you should look at for when price action goes up. Then as well, as I mentioned here, there was a spot over here that an algorithm is going to go to, and then there's this one down here that the algorithms are going to go to. So now, after I clean up some of this stuff here, and you zoom in, up here, these are the possible targets. Chances are, they're going to be hit along the way, and could be a little tighter on these. So when I put out the video, I'll have these marked, but again, over here, this is going to be what's going on here. All right. Anyway, I don't want to waste your time with drawing here, but so on the downside, this is where you can get in. If you decided to go short from here, you might be looking to take profits here or here. The other thing you could do at a lower time frame is you could start figuring out possible resistance levels. You should be kind of scouring the charts to see where you might have some resistance and support. And we kind of covered them already, really. This one right here seems to be a nice support and resistance line right here. So as this comes down, this might be a target for the sell. But on the upside, if you're in here, you might want to take 50% here, 25% here, and then see if you let the last 25% go to here. And then along the way, like if you got in somewhere over here, then you've put your stop loss somewhere over here, right? As this is moving up and down, it's not going to go up straight. You should be moving that stop loss up below a pivot low. So every time it creates a new, like for example, if you got in down here and you rode this up, then your initial stop loss would have been somewhere down here. And then when this went up, came down and came off, then you probably would have moved your stop loss over here. And then as you can see, look, I didn't even see this, but you can see that it bounced off these lines that I put down for possible targets. They are actually some support and resistance lines if you look left. So if you got in down here, you would have had your stop loss down here, and then as price action went up and came back down and then went back up, you could have moved your stop loss over here. And once it moved up, bounced off here and moved up again, then you would have your stop loss somewhere over here. And you just kind of keep riding it up. Like as it went up again, came down, now you would, possibly put it somewhere over here. And then as it goes up here, I have an idea, I have a feeling that it's going to kind of do the same thing like it did on these lines, So once it hits here and breaks through here, maybe it gets resistance and pops off here and gets support and then breaks up again. Then, right now, if you got in, your stop loss is here, and then once it breaks through here and tests it and goes back up, then you move your stop loss here. Same thing goes here. If this breaks through here, comes back, tests it, and goes up, then now your stop loss is here. And then you got to decide what you want to do with the rest of your money. When you get out, if you want to let it ride long term, you got to figure that out. So that would be the strategy that I would take if I were in on a trade here. I would decide to sell some here, and continually move up my stop loss, so that now you guarantee yourself, I mean, even if you make it, even if you just bring your stop loss to break even and you locked in 50%, you could guarantee yourself a no loss trade, right? There's no way that you could possibly lose as long as you're accounting for fees in your stop loss, you know, not only break even, but break even plus fees. Then you have a no risk, what they call a no risk trade, right? You're allowing it to breathe, you're allowing it to go up, and worst case, if stuff goes bad, it'll come back down and stop you out, but it'll stop you out in a point where you're covering your costs of fees and you're not losing any money on the rest of your position, right? So if you're already locked in at these targets, and whatever you're letting ride, if like, for example, if something happens and you get that big, you know, I mean, if you get a quick wick, you might not get out exactly at the price, but the stop loss is meant to be there to stop you out if the price comes back to that number. So ideally, if everything goes as planned, if things go south and price action comes back down and starts hitting these targets, you would have been already stopped out, because you probably would have had your stop loss up here as it's breaking through here. So as price action comes down, you're in profit, and you're actually locked in probably additional profit even though you got stopped out. So short-term targets, you know, in my opinion, for me, would be somewhere around 36, 37, which is the current high. Then if it kind of broke through that, based on the fibs and stuff that we talked about, maybe a 43, 43 and a half, 44, maybe even a 50, you know, round numbers. You know, people tend to like round numbers, so maybe it'll push up to 50, but you know, the sell prices that I've kind of figured out here based on Fibonacci extensions and retracements, you know, I would say 30, 37 something, 40, maybe 44. And then this was a pretty good range. It could go anywhere from like 68 to like 75 or something like that. So those are the kind of the areas that you got to think about for yourself. And also, you know, right now it's already pivoted off. You got to decide, you know, from here to here, is it enough, and is it low risk for you? Like, for example, though, it's a bad trade right now because in order for you to get into the trade now, you would get in here, and then you would have to be able to put your stop loss all the way down here below this pivot. Otherwise, you know, price action could hit it again. So you're going to have to be able to withstand a pretty substantial loss by putting your stop loss down here, whereas if you would have got in here, your stop loss would have been a lot smaller in terms of, you know, like, for example, let me see, long position. So if you would have got in here, your stop loss could be right here, and your first target could be here, right? But now if you got in here, look out, so let's go back. So if you got in somewhere when it bounced off over here, you know, you're getting like an 8-to-1 ratio, risk to reward. Up here, you know, now it's not even 1. I mean, some people live by a 3-to-1 or at least a 1-to-1 worst case scenario. You know, equal win to equal loss. You don't want to go below 1. So like right here, you've already missed a trade. So chalk it up as a missed trade, and now you just wait. If this price happens to come back down here and bounces off, then look, you know, these targets are still here. These don't change. And you know, if you get in somewhere down here, then now you're back up to a 4-to-1, you know, profit margin here. So that's why you want to get in, you know, you want to ladder yourself in, and if it's moved away too much from the pivot, you just got to kind of wait. You got to set your trap and just wait until it falls into it. And then that way, you know, you can put a small stop loss. So you're risking losing very little. And, you know, for example, again, if you got in here, say you even got in over here, because this wick was pretty good. This was all well, it's a day, so you could have probably got in somewhere around here. Now, if you set your stop loss maybe below this pivot and this pivot, just to kind of keep it there. And now you kind of, you've gotten out of 50%. Now this is, you're getting a 68 on the next 25%. Then if you let it go all the way out to here, you're getting a 15-1. So, keeping your, but in addition to all that, as you're tracking this up, your stop losses are going to come up here, right? Once you break this threshold, you're going to set your stop loss here. And then when price action breaks the next level here, you're going to bring this up here. And even if it turns around, you're getting out between where you got in down here and here. Let me just change this. So you got in over here, so you're still locking in that much profit by continually moving your stop loss up and letting the price action go up. If it goes south and it comes back down, you've still locked in from here to here of additional profits. All right, so it's like 26 minutes. I can't think of anything else that I want to show here. Just it's important to figure out the support and resistance lines. I actually derive these from Fibonacci's, but you can kind of look back and kind of see where the wicks are and where there was pivots and moves and where things bounced off the same thing a couple times. You could see very here, support. Didn't even reach up there, but I'm sorry. This is resistance. Actually here, came down here. This is support. This was resistance. Came down, broke through, tried to break up. Now this became resistance. It was support before, but now it's resistance. Came back down and it worked its way back up. Hit this line again. It met resistance. Came back down. Came back up. Kind of tried to fight through it. More resistance. Fell back down. Came up. Kind of missed it. But if you really, resistance aren't just lines. They're kind of ranges. So in reality, you're probably, the resistance range, is probably something like that. So, it hit that range again, came back down. Same thing here. It breached the range, came back down, finally broke through. Now it came back down and tested it, and then went up. And then same thing's happening here. So it hit that, broke that, now it came back down. So like if you pick off here, you could see there's a resistance right here. This is another resistance line that I actually drew in for the trade. So if you entered right there, that would actually probably be a good trade entry, because that's like a support line. So chances are, you saw wicks here, but it bounced off here a couple times, and it's a high probability trade, I think, to getting in around this area. So with that being said, that's all I got to really say here. You got your, possible targets here, short term. Can't really give you a timeline. All I can say is you can use a tool. You might be able to use a tool like Pitchfork to give you an idea. If you come over here and you just kind of draw the high to the low, and then you kind of draw in, and you get the most bounces off the price action, maybe something like that. You could, and then you could start seeing, okay, well, if it stays within this channel, it can hit this target somewhere. Ironically, I drew it almost perfectly. It looks like, in June, possibly in June, if it's going to stay in this channel. I mean, though it could happen faster, right? But it could bounce off here, come back down, work its way up, come back down. But in order to get to this green and stay within this pitchfork pivot, Fibonacci pitchfork or shift pitchfork, it has to wait until here to get up in this area. I mean, maybe it doesn't go that high, right? Maybe it just goes there. So anywhere from here, which is like the beginning of June, to so basically like mid-June, somewhere in mid-June, we could possibly see a Chainlink for $70. But again, these are all guesses. You're not going to know price action. You're not going to know how fast it's going to happen. For all we know, it might blow right out of this pitchfork, and this pitchfork becomes meaningless. But if you want to put a high probability bet, if it's going to stay within this and bounce around these levels, these are the approximate timelines that can happen. And like I said, a $70 Chainlink in the June timeframe, which is what? February? We're in March. So March, April, May, June. About 4 months. In 4 months, we can see it. Right now it's at 30. So it could do another 100%. There's another tool that I never used. I gotta see where it is. Is this it? It's another tool that I see people using that I haven't used before. I'm not sure where it is. Oh, here, ghost feed. So if we do something, from here to here, then you kind of I'm not really sure how to use this. I'm messing this up. There's a way to kind of take like a previous price action and copy it and kind of show, like, if you took this right here and you replicated it from this pivot all the way up to here. Let's try it again. It's gonna be the last thing I do, and then that's it. Kind of like that. Anyway, I'll figure that out and I'll show that to you next time. But there's a way to kind of copy this kind of price action and paste it over here and just kind of see how the bounces, and it'll be kind of curious to see if some of these bounces actually line up to these ranges. So I'm gonna play around to figure out how to do that, and in my next link video to you guys, or my next video, maybe I'll show this real quick and show how that played out, and go from there. All right, guys, it's a half hour. I'm sorry it's so long, but I think it's better to focus on one coin at a time to really give the right time to each coin instead of trying to rush through a bunch of coins. So I'm gonna try to do that. I'm not gonna do another video today. Maybe tomorrow I'll put out a Cardano and a Ethereum update to see where things are. And I look forward to having you on my channel. Subscribe to my channel, like and share, comment. Put some coins in the comments that you might want me to look at. Again, this is my interpretation of the charts. Don't hold this to gold. Kind of try to just practice doing what I did here and get familiar with resistance and support. Get familiar with Elliot Wave Theory and the requirements of the waves. Of course, there's more stuff going on in between these waves. But at a macro, this is the big picture 5-step wave that we have for Chainlink. And again, like I said, price action is not going to go straight up in a line like this. It's going to look like this. So there's going to be, if you set the traps along the way, there's going to be another opportunity for you to get into a trade. For example, just real quick, and that'll be it. I really am sorry to keep making this video longer, but I just want to show you, like, for example, if you missed this trade, it's okay. Just put your Fibonacci on here, and look, you could have waited. This is the actual resistance line. You could have waited and maybe got back in to a trade right here, and it's a lot of, like, 1, 2, 3, 1, 2, 3, 4. It held, and this is 5. So there's like little mini Elliott waves within the bigger Elliott waves. So, but if you just focus on the pivot in Fibonacci retracements and you look to get in somewhere between 0.5 and 0.65, you really can't go wrong. And I strongly suggest you cost average in, or ladder in, what they call, and build a position here. Buy a little bit here, buy a little bit here, buy a little bit here. And then when that turns, you're going to have an average price, and then you could ride it up. I mean, this would have been a nice one, right? You would have rode it from here to here. So, again, don't chase a trade. set the trap, wait for the entry to happen, and you know, trade with the trend. It's a higher probability. Counter trending is nice, but you know, if there's a bull market going on, why would you try to play the downsides? You know, a lot more to the upside than there is to the downside. You can see, like, you could have made money here, you could have made money here, but look how much money you can make if you just played the trend. All right, guys, take care. Till next time. Hope you liked the video. Show some support by subscribing to the channel. Like, share, comment. Let me know what your thoughts are, and I'll talk to you guys again tomorrow. Take care. Have a great day.